All right, everyone. This one is hot off of the press. This is Robinhood. They had their earnings today, so I would imagine most people know what this stock is. Uh, I was following this guy all the way back when it was $8, and no, I did not buy it. I was not that insightful. But I've been watching this one for a while and had its earnings today. So we'll do three things like I always like to do. I like to look at the current valuation, the latest earnings, which was today for Hood, and then kind of other things to consider for them. So I'm assuming as of right now, at least, the market didn't like this earnings report. It's down 10% after hours. Um, for all we know, that reverses tomorrow. I guess we'll see. But we'll look right off the bat, and we'll remember this for the future, but we're looking at a market cap of 74 billion and 900 million shares outstanding, which actually is not bad for a company this size. You have to see this share count as small as possible, but this is not bad. So let's look at the earnings, and then we'll figure out why Wall Street didn't like it. Oftentimes, it has little to do with what the so-called expectations are. I think sometimes it has more to do with forecasts and other little things that Wall Street can get kind of nitpicky about. So let's start with the revenue. You're looking at still some transaction-based revenues, which must be commissions and whatnot, 7% growth. Net interest revenue growth. Overall, look at this. They even got quarter over quarter change. You see that? So, yeah, look at that. So, and they have it listed backwards. So that's kind of cool. You don't see that. But anyways, yeah, overall about a 15% revenue growth. And then for quarter over quarter change, which is an interesting metric, it was actually a decrease, and maybe more relevant if you're not dealing with a seasonal business. So that'll be a kind of cool thing to look at. And then you look at their total operating expenses, you see an 18% growth year over year, which slightly overshadows the growth, not by a lot. Then let's see. I want to see the net income very slightly increased. Looks like largely to do with some income tax, a provision for income taxes. Let's see. So overall, I'm not really seeing anything super big other than that, year over year, at least it is growing. I guess quarter over quarter, if that's what you want to focus on. You are looking at a decrease. So that might be what, in a company like Robinhood where there is no seasonality really, maybe that's the thing to focus on. And I would imagine what I think I saw is there was something to do with there was like less crypto trading going on. So, I'm not gonna look too deeply into the rest of this. The balance sheet, I don't know that I care that much about. I think that I already got what I wanted, which was this latest. For these bigger, healthier companies, I'm not as concerned with, like the balance sheet and the statement of cash flows. I'm more concerned about, like forecasting and like the valuation. So you got to ask yourself, speaking of valuation, you got to ask yourself, this is in millions. So you're looking at, for these 3 months, if you made, oh gosh, that's going to be $1 billion. If you made $1 billion in one quarter, that means that you're assumedly making $4 billion every year. And this will confirm that for us. Yeah, about 4 billion for 2025 at least. And that's been growing pretty strongly. But you got to ask yourself, okay, they're making $4.5 billion. Do you need $74 billion to create $4 billion? That's kind of what you're looking at for the valuation. And you could compare to peers. There's lots of different things on what people want, but that's just something to ask. I like to just ask that in the most simplest way. Just be like, do you need $74 billion to create $4 billion every year? And I'll let you guys answer that. Let's see what also is coming out here that I'm noticing. I want to see. I think this is what I want to ask now. I'm pretty sure the reason why the earnings was bad was because there was less crypto revenue. Hood stock had its earnings today. Why is it down 10% after market? And then I want to check outstanding shares we already looked at. It was about 900 million. Let's look at the short interest too. I'm just going to use Fintel for that. I could ask ChatGPT, but let's just see. I kind of want to compare what Fintel says to what ChatGPT says. Hood, short interest, 4%, very small short. So that's not really a factor. Okay, let's see. Earnings per share, missed. Revenue, missed. So double miss here, but I've seen all sorts of different, what the expected amount was. So maybe you guys can fill me in more on that. What's there? But according to this, it's a double miss. Market reaction, growth, slowdown, concern, users and assets are still growing. Okay. That's a good question to ask. I do want to ask, are the users, are more people using Robinhood over time? Yeah, so so right off, I'm sure there's some that's the term, AUM. I'll ask ChatGPT that afterwards. Valuation. What is the current AUM and how has it changed over the past years? Okay, that's fair enough. Assets under custody. So growing a lot. Look at that. So yeah, very, very high. Yep. New users, strong crypto cycles, net deposits. So that's still strong. Weakness in trading activity. Yep, here it is. Crypto trading revenue down sharply, 47%. Are we that surprised though? Bitcoin's kind of in a lull right now. So I don't know is that a Robinhood thing? I don't know. That's for you guys to decide. But yeah, they're saying growth slowdown, but it's from what I'm seeing, the assets are still growing. Revenue was still up year over year, and then they're doing buybacks too. How many buybacks has it done this last year? Then I want to ask about insiders. 1.5 billion buyback program. That's not nothing. I mean, when you got a market cap of 74 billion, that's something. Yeah, 25 million shares repurchased. All right. Uh, does Hood stock use stock-based compensation? Because sometimes stocks will do buybacks just to offset the stock-based compensation. So in 2025, it gave out 750 million to employees. Annual run rate 300 million. So they're buying back a little more than what they're giving for stock-based compensations. Um, has the total outstanding, and I'm going to ask if what the total outstanding shares, if that's changed. You can see that in the statement of cash flows here, if I can find it. It'll tell you under financing. Um, Under financing activities, if they're getting a lot of money from issuing stocks, that's where you can see this as well. Has the total outstanding shares increased? Okay, increased over time, but this is not bad. Well, that's not true. 2021 to 2022, it like massively increased, but since 2022, basically flat. Okay. And then I want to see, yeah, are insiders buying the stock? Okay, so the insiders are selling. They're not doing open market buys. So there's a few. Okay. Well, so what I'm seeing here at least is, there was quarter over quarter, there was a decline. Year over year, there's still growth. I am kind of thinking that part of this reason why their revenues are down is because less trading due to crypto, due to Bitcoin being down and all those sorts of things. So this is really interesting. I haven't looked at Hood in a while. I know this is a retail favorite. So, and I wouldn't even come close to calling myself an expert on it. This is just, again, just discovery, just looking at stocks and whatnot. So if there's anything I'm missing or you want to add, I would love to learn, love to hear it. And it was really fun looking at Hood. So I will see you guys in the next